Amazon puked as well. Jason, can you just throw up the big tech chart? Because I think like you guys should see this, because I think this is very important for Silicon Valley.
Amazon reported their Q3 earnings yesterday, Thursday. Total revenue, $127 billion, up 15% year over year, 5% quarter over quarter. Net income was $2.9 billion. And they're predicting, they're giving slower guidance going forward.
I mean, what's incredible on this chart is that, when everybody talks about being long the S&P 500, it was always really a proxy for being long Amazon, Facebook, Google, Microsoft, and Apple. And at the peak, in May of this year, it was still, 25 cents of every single dollar of the S&P 500 were these 5 companies. And, we always said the market bottom will be when the generals, quote unquote, get shot, to borrow a phrase from Gavin Baker. And it looks like the generals have been shot. Yeah. And what's incredible is this week, every single one of those companies, other than Apple really, reported pretty crappy earnings. They got totally taken to the woodshed. The percentage of these companies as a percentage of the S&P is now, off by 500 basis points. It's down to 20%. Yet the markets are ripping higher today. So I think it's kind of what we talked about 3 weeks ago. Like the bottom is kind of in for the short term, so it's really exciting actually to see. I think this is the point where you have to now start to get pretty constructive about where things are going. Because if this stuff could not bring the market down, it's hard to see something other than an exogenous event, probably some Russia-Ukraine event, really having a negative impact. So to me, I'm kind of like, I don't know, it seems like pretty bullish for me.
Well, also GDP was 2.6%. So, I mean, this very weird conflicting data. We had 2 negative quarters of growth. We're in a recession. Then we have the third quarter is up 2.6%. So, okay.
No, but remember, Jason, I said that we were going to have a double dip. That was that was the most likely thing. So we had this sort of mild technical recession based on nominal GDP growth not being bad, but simply not quite keeping up with the inflation rate.
Yeah.
Now things are a little bit better, but I still think the huge recession is to come next year because of all the interest rate increases we've seen. So the Fed is, pedal to the metal on interest rate increases, just like they were pedal to the metal on printing money. And so first they were too loose and now they're probably being too tight too fast. So I think we're headed for a huge recession next year. And I think you're seeing that in the softness of all these forecasts.
Yeah.
But look at the mortgage rates right now. Something like 7.1%.
Mortgage rates are crazy. They broke the backs of the housing market. The inventory and prices, inventory shot up, prices have shot up, new mortgages have gone down. And, we talked about job openings. Here's the Fred chart for job openings real quick. You can see the peak we were talking about. We were wondering if that would come plummeting down. Well, here it is, folks. Yeah, plummeting down from 11 million, losing 1 million in a month. Yeah, job openings coming smashing down. There's the Fed fund rate. That's a pretty high ramp. So you think double dip recession? What do you think, Freeberg, Chamath, in terms of what 2023 looks like? You're sort of saying, Chamath, a bottom is forming. I kind of agree with that.
I think the stock market is going up. Then it'll go back down because I think what David said is right. But for the short term, this thing is going up.
Short term up, and
we've generally been positioned for it to go up, and at some point we will reverse and position for it to go back down, but it's going up.
Sachs, it seems like you took a week off from the All In podcast, and people stopped talking about Ukraine. You want to give us an update? I mean, obviously the war's not over, but it does seem like it somehow has fallen out of the public's consciousness a bit. I don't know if you disagree.
I don't know if I go that far. There was the big event in the Ukraine war debate this week was that the House Progressive Caucus put out a letter signed by 30 progressive members to merely suggest that while we continue to fund Ukraine on a virtually unlimited basis, we also, in parallel, open up a diplomatic track with Russia to mitigate against the threat of us being drawn into the war and specifically a nuclear war. And just that very, I'd say, anodyne letter, that very tepid sentiment, really, they weren't questioning in any way the providing, again, of virtually unlimited support to Ukraine. That met with such a fierce reaction on social media and in the traditional media that I think all but one of the signatories recanted or walk back the letter. And kudos to Representative Ro Khanna for not being one of the people who recanted. He stood tall and gave an interview on CNN and MSNBC saying, why has diplomacy become a dirty word? I voted for every single appropriation to give aid and weapons to Ukraine. I'll continue to do that, but I don't see a problem with us maintaining diplomatic relations. We might need those to avoid an unwanted escalation.
Well, and here we are.
Yeah. Kudos to him for standing tall, but it's amazing to me that the Progressive Caucus, which used to be one of the groups in Congress that questioned American involvement in foreign wars, like the Iraq War, they basically, they have moved off that, and they threw in the towel so quickly on this. It was really kind of pathetic to see.